The ability to spot the exact low of a market cycle, identifying the moment institutional operators transition from selling to buying, is the ultimate goal of sophisticated trading. Guessing when a decline will end is a recipe for disaster, leaving your capital vulnerable to continuous drawdown. Richard Wyckoff, a legendary figure in technical analysis, developed a methodology precisely for reading the intentions of the so-called Composite Man, the aggregated force of large institutional operators. By understanding Wyckoff's 5 phases of accumulation, traders can move beyond subjective analysis to identify high-probability, low-risk entry points at the true transition from decline to markup. This framework provides a structured, logical approach that reveals the necessary steps the Composite Man must take before initiating a major uptrend, offering us a definitive blueprint for the perfect entry. Our objective is to decode the subtle yet powerful signals that confirm supply exhaustion and the dominance of institutional demand. The entire process of accumulation is a calculated campaign designed to acquire shares quietly while simultaneously shaking out the remaining weak holders. Wyckoff's methodology allows us to visualize this campaign, breaking it down into distinct, measurable phases that confirm the bottoming process is underway. We will explore the 5 critical secrets embedded within this accumulation structure, moving sequentially from the stopping of the decline to the final trigger for the markup phase. Mastering these secrets is the key to entering the market precisely when the risk is lowest and the potential reward is highest, aligning your trades with the most powerful forces on Wall Street. The concept of the perfect entry is not about predicting the future. It is about reacting intelligently to observable evidence of institutional manipulation. Wyckoff's work is grounded in the fundamental law of supply and demand, viewed through the lens of price action and volume. He taught that all significant market movements are orchestrated by large, well-funded interests, whose actions leave distinct footprints on the chart. By studying these footprints, we can anticipate the shift from a downtrend, where supply dominates, to an uptrend, where demand takes firm control. Understanding the 5 phases is essential because they represent a sequential narrative of conflict between buyers and sellers. Phase A marks the end of the selling panic, while Phase B is the long, grinding period of building a cause necessary for the subsequent effect. Phase C is the decisive moment of truth, testing the market supply, followed by Phase D, the transition, and Phase E, the actual markup. By meticulously verifying each phase, we ensure we are not buying a temporary bounce but are entering at the precise moment the Composite Man has finished his accumulation. This disciplined approach eliminates emotional decision-making, replacing it with a robust, evidence-based trading protocol. The first critical secret is recognizing the violent end of the prior downtrend, marked by a dramatic shift in volume and price behavior. This phase begins with the selling climax, a point of maximum panic where the price drops sharply, accompanied by ultra-high volume and a wide price spread. The selling climax signifies that the last weak holders are capitulating, and crucially, large institutional buyers are stepping in aggressively to absorb this supply for the first time. This massive buying temporarily overwhelms the selling pressure, putting a definitive stop to the downward momentum. The immediate sharp reaction high that follows the selling climax is termed the automatic rally, which defines the upper boundary of the impending accumulation trading range. The automatic rally occurs because the intense institutional buying has created a temporary vacuum of supply, causing prices to snap back quickly. The difference between the low of the selling climax and the high of the automatic rally establishes the critical boundaries within which all subsequent accumulation will take place. This range defines the battleground where supply and demand will fight for control over the coming weeks or months. Following the initial excitement, the market will inevitably drop back down to test the newfound support level established by the selling climax. This movement is known as the secondary test, and it is a crucial component of Phase A, confirming that the initial panic has subsided. For the secondary test to be valid, the low must hold above or very near the selling climax low, and critically, it must occur on noticeably lower volume. Low volume on the retest demonstrates that the initial panic sellers are gone, and residual supply is significantly easing, confirming the market is ready to move into the absorption phase. Secret number 2 reveals the true nature of institutional absorption, which is Phase B, the longest and often most frustrating period for traders. This phase is characterized by price oscillation back and forth across the defined accumulation trading range, representing the systematic absorption of all available supply by the Composite Man. The institutional operators are deliberately keeping the price contained, ensuring they can acquire the necessary inventory without driving the price up prematurely. This grinding process is where the cause is built, providing the energy required for the subsequent effect, or the eventual markup. During Phase B, volatility and volume generally decrease over time as the Composite Man meticulously clears out the remaining overhead supply. They will allow the price to rally toward the top of the range only to knock it back down, ensuring that any sellers waiting at higher prices are satisfied. This repeated horizontal movement is designed to wear down patience, leading many retail traders to abandon the stock due to boredom or perceived lack of direction. The repeated failure to break decisively below the secondary test low is a critical detail in this phase, indicating that any remaining residual supply that surfaces is being systematically bought up by institutional hands. The successful completion of Phase B requires patience and careful observation of the internal dynamics of the trading range. We must see evidence that the market is becoming tired, meaning that rallies are struggling to penetrate the upper range boundary, and declines are failing to reach the lower boundary with conviction. This tightening action confirms that the float of available shares is shrinking, a direct result of the Composite Man's absorption process. Once the supply is sufficiently absorbed, the market is primed for the next most decisive phase, which will test the strength of the accumulation. The methodical absorption process seen in Phase B is often mirrored in major historical market cycles, where periods of intense panic are followed by lengthy periods of consolidation before a new bull run begins. Studying these historical precedents provides invaluable context, showing that the patience required during accumulation is a necessary component of successful trading. If you are interested in the deeper historical context of these market maneuvers, understanding the giants who shaped Wall Street and the crises they navigated can profoundly enhance your market perspective. Just as Wyckoff meticulously documented institutional behavior, there are countless stories of financial crisis, market manipulation, and the extraordinary figures who mastered the flow of capital throughout history. To deepen your understanding of the psychological warfare and historical forces at play behind these accumulation phases, I highly recommend checking out the Wall Street Memoirs channel. This resource provides detailed narratives on historical events, major financial crises, and the legendary figures who defined Wall Street, offering the essential backstory to the charts we analyze today. By connecting Wyckoff's principles to real-world historical events, you gain a richer, more actionable understanding of the Composite Man's enduring tactics across generations. You can find a link to the Wall Street Memoirs channel right below this video in the description. Secret number 3 introduces Phase C, which contains the most definitive signal that the accumulation is nearing completion and often marks the absolute lowest price of the entire structure. This signal is known as the spring or shakeout, and it is a deliberate engineered move by the Composite Man designed to perform one final comprehensive test of supply. The spring involves driving the price momentarily and aggressively below the established support level, penetrating the lows set by the Selling Climax and the secondary tests. This move is calculated to trigger stop-loss orders placed by retail traders who bought within the trading range, forcing them out of their positions at a loss. The purpose of the spring is twofold. First, to ensure all remaining weak holders are forced to liquidate their positions, thereby providing the Composite Man with the last available shares at discounted prices. Second, the sharp break below support is intended to trick bearish traders into initiating short positions, believing the downtrend has resumed. This maneuver ensures that when the market reverses, these newly shorted positions will provide immediate fuel for the ensuing rally as bears scramble to cover their trades. The spring is the Composite Man's final attempt to clear the deck before the main event begins. The crucial element of the perfect bottom signal is not the break itself, but the immediate and decisive recovery that follows. For the spring to be successful as an accumulation signal, the price must quickly reverse and move strongly back into the established trading range. This rapid recovery confirms that the move below support failed to attract any sustained selling interest or new supply, demonstrating that the shakeout was effective and the Composite Man successfully absorbed the remaining shares. A failed spring, conversely, would see the price linger below support, signaling genuine supply still exists. Following the immediate recovery back into the range, the market typically performs a critical follow-up action, a low-volume test of the area near the spring low. This test confirms the supply exhaustion. If the Composite Man has truly accumulated all the necessary shares, any subsequent decline toward the spring level should meet virtually no selling pressure, resulting in a narrow price spread and significantly low volume. This low-volume retest is the ultimate confirmation that the remaining supply has been exhausted and institutional control is absolute. This point often marks the lowest risk entry for the most conservative Wyckoff traders, although the true perfect entry awaits one final confirmation. The psychological impact of the spring cannot be overstated, as it is designed to maximize pain and doubt just before the market turns. Traders who recognize this manipulative tactic understand that extreme pessimism and a sudden sharp drop below established support are often prerequisites for a powerful upward movement. This realization separates the informed Wyckoff trader from the general market participant who reacts emotionally to the apparent failure of support. The successful navigation of Phase C means the market is now ready to transition from a period of supply absorption to one of clear demand dominance. The intensity of the spring is proportionate to the amount of weak supply remaining, sometimes manifesting as a deep dive far below the support, and other times as a quick, shallow penetration. In all cases, the volume signature is key: high volume on the downward thrust of the spring, followed by dramatically lower volume on the subsequent retest or pullback within the range. This volume relationship confirms the shift from institutional selling pressure to institutional buying support. We must wait patiently for the market to complete this final test, as rushing the entry before the low volume confirmation is a common mistake that leads to premature losses. The accumulation process is a detailed study in market psychology, where the Composite Man uses fear and greed to facilitate their objectives. The spring exploits the fear of breakdown, drawing in those who believe the market is collapsing and forcing out those who bought too early. Once these maneuvers are complete, the market structure shifts fundamentally, moving into the final phases of confirmation and breakout. Recognizing the spring as a necessary engineered event rather than a genuine collapse is the hallmark of advanced Wyckoff analysis. The entire range established from the Selling Climax to the automatic rally now acts as a massive launching pad. The spring confirms that the base is solid and the institutional commitment to the upside is firm. We move forward from Phase C knowing that the supply has been thoroughly vetted and absorbed, and the market is now poised for the critical transition that validates the entire accumulation structure. Without a clear and successful spring or a similar definitive test of supply, the accumulation pattern remains incomplete and the risk of failure remains high. Secret number 4 identifies Phase D, the critical transition stage where institutional demand finally asserts its dominance, moving the price out of the consolidation area. The primary signal here is the sign of strength, a decisive, high-conviction move that breaks significantly above the midpoint or, ideally, the upper boundary of the accumulation trading range. A true sign of strength must be characterized by high volume and a wide price spread, demonstrating a clear commitment from institutional demand to push prices higher. This move confirms that the absorption process of Phase B and the testing of Phase C were successful, and the market's character has changed from sideways to bullish. The sign of strength is not, however, the ideal entry point, as chasing a sudden breakout often leads to buying at a temporary high. Instead, we wait for the crucial follow-up action known as the last point of support, which provides the low-risk entry trigger. The last point of support is the first significant pullback that occurs after the sign of strength, often returning to test the upper boundary of the old trading range. This boundary, which previously acted as resistance, now acts as strong support, demonstrating the principle of polarity in action. The perfect entry point is executed when the price reverses cleanly off the last point of support, provided the volume on the pullback was notably low. Low volume on the retracement confirms a lack of residual selling pressure, indicating that the move back to support was merely a healthy correction and not a resumption of the downtrend. The entry is placed as the price moves up, confirming the reversal, with a tight stop-loss placed just below the last point of support low. This setup provides the highest probability trade with minimal risk exposure, capitalizing on the validated institutional demand. Phase D may contain several signs of strength and last points of support, especially in larger accumulation structures, as the Composite Man gradually pushes the price higher. Each successive sign of strength should confirm higher lows and higher highs within the emerging trend structure. Monitoring the volume profile during these pullbacks is non-negotiable. Any substantial increase in selling volume during a pullback invalidates the last point of support and suggests the accumulation might be failing or requires further testing. The transition phase is the final proving ground before the market commits fully to the markup. Secret number 5 confirms the successful completion of the accumulation campaign and the initiation of the markup phase, where the price moves freely upward. Phase E is characterized by the price definitively moving above the resistance established in Phase D, confirming the start of the new uptrend. This final breakout should occur on high or increasing volume, demonstrating that the market is attracting broad participation and strong demand. The Composite Man is now actively marking up the price, having acquired their inventory at the lowest possible prices during the earlier phases. The character of Phase E is fundamentally different from the previous consolidation phases. Prices now exhibit a consistent pattern of higher highs and higher lows, clearly showing that demand is dominating supply at every turn. Pullbacks are shallow and short-lived, and they consistently hold above prior support levels, often testing the breakout level before quickly resuming the ascent. This is the reward phase for the patient trader who correctly identified and waited for the accumulation structure to complete. While Phase E is the most profitable period, it requires continued monitoring using Wyckoff's principles to identify signs of distribution or weakness. The goal is to ride the trend while demand remains clearly in control, using volume and price spread analysis to ensure the uptrend remains healthy. Recognizing the transition into Phase E confirms the entire Wyckoff checklist has been satisfied, validating the initial analysis of the market bottom. This phase is the realization of the cause built during the long grinding period of Phase B. The successful navigation through all 5 phases ensures that the entry was made at the optimal point, minimizing risk and maximizing profit potential. Wyckoff's method is not merely about recognizing patterns. It is about reading the underlying dynamics of supply and demand, understanding the institutional intent behind every price movement. By waiting for the definitive signals of Phase D, particularly the low-volume test at the last point of support, the trader ensures they are entering the market precisely as the Composite Man is prepared to launch the price upward. Synthesizing the 5 secrets provides us with a sequential, high-probability checklist for identifying and executing the perfect entry at the market bottom. This process moves systematically from recognizing the end of panic to confirming the final demand-driven breakout. We are looking for an unbroken chain of evidence that confirms the Composite Man's accumulation campaign is complete and successful. This detailed approach moves trading from a game of chance to a matter of disciplined observation. The first step in this protocol is to define the accumulation trading range, clearly marking the boundaries established by the Selling Climax low and the automatic rally high. This range provides the context for all subsequent analysis and defines the battleground between supply and demand. Step 2 requires patience, as we must wait for the engineered low, the critical spring or shakeout in Phase C, which is designed to clear out the final vestiges of supply. This maneuver is the final act of deception before the rally begins. Step 3 is the confirmation of supply exhaustion, which demands observation of the volume profile following the spring. We must confirm the low volume test of the spring area, demonstrating that the market failed to attract new sellers, confirming the Composite Man has successfully absorbed all available inventory. Step 4 involves waiting for the sign of strength in Phase D, the high-volume move that decisively breaks through resistance, signaling that institutional demand has firmly taken control and the market character has shifted to bullish. Finally, Step 5 dictates the execution of the perfect entry on the reversal from the last point of support. This is the low-risk entry point, occurring when the price pulls back to test the newly established support, the old resistance on low volume, confirming the strength of the breakout. By following these 5 sequential steps, traders eliminate the guesswork and align their trades with the powerful flow of institutional capital, capitalizing on the most favorable risk-reward setup. This entire methodology emphasizes that Wyckoff's method is fundamentally based on reading the cause and effect of supply and demand, not simply recognizing static chart patterns. The patterns, the selling climax, the automatic rally, the spring, are merely the visible evidence of the underlying struggle between the Composite Man and the public mastery comes from understanding the volume and price spread relationship at each critical juncture, ensuring that every piece of the accumulation puzzle fits perfectly before committing capital. The disciplined application of this 5-step protocol is what separates successful Wyckoff traders from those who struggle with market timing. By verifying each secret sequentially, you ensure that you are entering the market only when the weight of evidence overwhelmingly supports an imminent markup phase. This structured approach provides the confidence necessary to hold positions through the inevitable minor corrections of Phase E, knowing that the foundation for the uptrend was built through meticulous institutional accumulation. If you're serious about mastering these time-tested methods, understanding the nuances of Wyckoff's original teachings is indispensable. The principles discussed here are foundational, but the depth of his market insight extends far beyond these 5 secrets. To fully integrate this knowledge and apply Wyckoff's complete framework for analyzing market cycles, distribution, and markdown phases, further study is highly recommended. For those ready to delve into the complete original methodology that has guided professional traders for a century, I recommend the adapted classic, How I Trade and Invest in Stocks and Bonds. This essential volume provides Richard Wyckoff's verified methods for market analysis, detailing how to identify the intentions of large players and make reasoned, informed trading decisions based on his comprehensive framework. It breaks down complex concepts into actionable strategies, allowing you to move from theory to practical execution seamlessly. Find the link to How I Trade and Invest in Stocks and Bonds in the description below, and begin your journey toward true market mastery today.